Good evening, everybody. I see you're all coming in. First of all, I want to welcome you to this presentation of One-Click FX presented by Vantage Markets in collaboration with Trading Engineering. And this is going to be a presentation of One-Click FX, which is an innovative trading software that allows you to easily trade all your favorite financial assets from your Metatrader 4 terminal. It's a tool that has been developed for the MT4. It's also available for MT5 and is one of the softwares created by Trading Engineering to help traders that want to begin their trading career. And also it's a tool that supports giving a different perspective on the markets also to more experienced traders. So first of all, I want to thank you for being here. It's my pleasure really to have the opportunity to present to you today One-Click FX, which is actually one of our best trading systems. I'm not gonna really bother you with my personal presentation. Of course, I'm one of the founding partners of Trading Engineering. But before we start, I want to remind you that any material and or content provided herein is intended for educational purposes only and does not constitute investment advice on how clients should trade, as it does not take into consideration your personal objectives, financial circumstances, or needs. Please seek independent advice before making any trading decisions. Reliance on such material is solely at your own risk, and the company, meaning Vantage Global Limited, cannot be held responsible for any losses resulting directly or indirectly from such reliance. Past performance is not an indication of future results. So with that said, we can start our presentation. I'm a financial advisor. I'm an analyst and an independent trader. I work for Trading Engineering, and I'm focused on the MQL Suite project. And One-Click FX is one of the trading systems and softwares that has been created during this experience with MQL Suite. Let me tell you something about Trading Engineering. We are a group that started helping traders around 2015. We create trading tools for MetaTrader and CTrader. We offer support, direct support to the traders, doing training and analysis and operational webinars. So we are focused on the creation of the instruments that allow traders to trade more easily. And we also provide the training. We explain what our indicators do, what our indicators allow us to understand about the markets, about how they move, how they are correlated, and what the best levels to trade are in general on any asset class. So the aim, the goal that we set for ourselves with these instruments is to make your trading simpler. And One-Click FX is one of the tools that perhaps in the simplest way possible allows you to become a trader that looks at the market and operates on the market in a professional way. I'm going to try to explain what I mean by this during this presentation. Of course, it's a system that supports traders with different styles of trading. Our instruments can be used for trend following operations, for contrarian operations, and also they can be used on different time horizons, because one of the characteristics that make One-Click FX really useful for us traders is the fact that it provides real-time multi-time frame analysis, 3 integrated trading strategies, and also an innovative form of algorithmic analysis. So what the software provides is actually a way to get an analysis, a professional analysis, technical analysis done faster. It gives you objective information. It allows you to read correctly the trend and the momentum of the market, and it also provides a built-in operational checklist. I'm going to show you shortly what I mean by that. Also, as I was mentioning earlier on, we do not only provide the instruments, but also support. And for Vantage markets, this means weekly video reports and trading sessions. Trading sessions during which we're gonna learn together how to use the instruments properly, how to use them better, how to make them work for our operational activity. I gotta tell you, giving you some background about myself, I was a financial advisor, but not a trader when I started with this group. And I actually became a profitable trader using these instruments, learning how to read the market through these instruments, and then learning how to use them operationally. So they are really an opportunity to start a process or to fine-tune our trading activity. Now that I gave you a brief once-over, I'd like to go directly to the trading platform and show you what I was talking about. So this is One-Click FX. As you can see, it's a Metatrader profile, which consists of two windows, two main charts. The first one is an analytical tool. It's called Square Dashboard, and it's an instrument that provides both a trend analysis via the net changes of the multi-day timeframes of the instruments of our checklist, watch list, sorry, and it's also a navigation tool. So one of the, let's start by with the navigation system. Metatrader, as you probably know, is not really efficient in terms of navigation of the market. It doesn't come close to more advanced platforms, professional platforms that have, of course, their advantages, but they're also very costly. Mostly they allow you to trade only futures, so it may not be the best way to start trading, and it may not be the best way to approach the market for someone who doesn't do that professionally. So we always stuck to the Metatrader. We love it. It's easily programmable. So we wanted to make the Metatrader, in terms of usability, in terms of the basic functions, such as the navigation, a little bit closer to professional platforms. So we created a navigation system. So as you can see here, I set up my personal watch list with the 28 main forex pairs, the metals, the most important indices. I also have some cryptocurrencies. Now, once I set my customized watch list, I can move from one symbol to the other simply by clicking on the symbols right here. So as you see, moving through the markets, scrolling the symbols, it's never been easier. And it's something that we created when nobody actually used anything like this on Metatrader. So we've been pioneers in this sense, and also with some of our analytical models. Of course, I'd like you to ask questions as I go along. Let me go a little bit further, but then if anything should not be clear, if you have some curiosities, the chat should be active. No, I'm just gonna activate it right now. From now on, you can write your questions through the chat. So I'd appreciate some questions from your side. So this is the navigation that actually simplifies the way we use the MetaTrader. We have more than 3,000 traders that use our instruments, and well, it's our experience that when you start getting accustomed to this way of using the MetaTrader, you don't easily go back to the naked MetaTrader that we all know, and we all appreciate the limitations, because this is actually the MetaTrader as it is. And so moving from one market to the other is not really a piece of cake. And for someone that does short-term trading, that could be a problem. Now let's move on to the analytical aspect of the dashboard. As you can see, the dashboard relays the net change on the current price of every symbol and the net change of what we call the multi-day timeframes, the daily, the weekly, and the monthly. And in doing so, it gives us the short-term trend of all the symbols of our watch list. So as you may have noticed, when the net changes of the multi-day timeframes are aligned, either in positive territory or in negative territory, the symbol lights up. So through the use of color, we can easily identify the trend of every instrument, but not only that, also the trend of every asset class, intended as every currency basket, every metals, indices, cryptocurrencies. So for example, today, and actually this month is fairly easy to assess that the Australian dollar is in a bullish trend. So Australian dollar, US dollar gains 4.18% on a monthly basis. It's up on the week, it's up on the day. The same goes for Aussie New Zealand dollar, Aussie yen, Aussie Swiss franc, etc. And this is because China is reopening. This is because today the market was surprised with a higher than expected inflation figure. So the Australian dollar is clearly in a bullish trend. And when we can, with a simple look in a split second, assess this, of course, we have in our hands an objective information that can be used operationally, because the fact that the Australian dollar is bullish does not only mean that we can look for continuation entries on the Australian dollar, but it also means that overall the risk profile of the market is bullish, is risk on. Today we had a small correction on some of the main indices. For example, the Nasdaq is losing 0.72%, but it's up 7.94% on the month. So Square Dashboard is an instrument that actually allows you to determine what's the trend of every single market of the different asset classes, and it allows you to establish whether there's a risk on or risk off environment in the market, which means that really in a matter of seconds, we can understand what are the instruments to trade and in what direction. Because when we have a risk on profile of the market, of course, we're not going to look for long entries on the yen, the Swiss franc. We're not going to look for long entries on the US dollar. We're going to look for long entries on the Australian, the New Zealand, the Canadian dollar, which today is on the bearish side because the move of the Bank of Canada was hugely expected. And so we're going to look for long entries, bullish entries on the commodity currencies, on the indices, on the cryptocurrencies. So we have a clear-cut idea of what we should do and should not do maybe more importantly, on the market. So in terms of scouting the best instruments to trade and the direction to trade them in, Square Dashboard is really a great help because it makes this work really simple, really immediate. And even those who do not trade the markets and who have not been trading the markets for some years, with an instrument like this, can really start to understand how the market moves in a brief period of time, of course. The other aspect that the dashboard allows us to establish is whether or not the typical correlations between the instruments are active or not. So if we see that the Australian dollar is bullish, but the indices are all bearish, well, it means that there's something strange. It means perhaps that this is a Australian dollar story. It's not really a risk-on profile of the market. When we see the Australian dollar, the New Zealand dollar, all the indices, all the cryptocurrencies going long, it means that the market is really bullish, the market is really risk on. So we only have to select the best instrument or the usual instrument that we are accustomed to trade, and we already know what's the approach. Okay, so with a simple dashboard, we have a navigation function, and we can extract a bunch of useful information to understand the market before starting to trade. Because the most common mistake that we do as traders is that we open the chart of the instrument that we are used to trading. So, for example, euro dollar, many trade only the Germany 40, the DAX index. Some traders only trade the S&P 500, etc. And we start trading without knowing what the entire market is doing. So if we want to start to trade like a professional in a professional manner, we should start analyzing the market as a whole before we decide whatever type of entry. And with Square Dashboard, anyone can do it in a matter of minutes. So once we assess the trend of the market, its momentum, the risk profile, the correlations, we can move on to the technical analysis study. And for sure, the best that we have here with one-click FX is the percent pivot. Here we have 3 buttons that can that allow us to move from one technical analysis study to the other. I'm going to present them. I'm going to present all 3, but I like to start with percent pivot because, in my opinion, it's the best one, and it's the indicator that I use for my personally for my operations. We started with the percentage analysis of Square Dashboard. One of our intuitions, because we looked around and nobody actually ever did this, our intuition was to transform net changes into horizontal levels. Supports, resistances, calculated starting from the close of the previous period. Percent pivot at the opening of the selected period traces this operational grid on the chart. So as soon as the day opens, the week opens, the month opens, we already know what percentages correspond to what prices. So this is the euro dollar, and on H4, the H4 time frame, we're looking at the weekly grid. So these levels appeared on Monday morning, and they're a blueprint to trade the instrument for the entire week. So on a weekly basis, we move from by increments of 0.5%. So the first resistance is 0.5%. The first support is minus 0.5%. Okay, so we have a starting range that defines an area of neutral price action. When the market breaks above our resistance, the directionality starts to take shape. The long directionality starts to take shape. On the other hand, when the price breaks below our first support, of course, the week starts to assume a bearish outlook and a bearish tendency. While the price is inside our starting range, we try not to take position. What we can try to do is on the upper and lower level of the starting range is to look for contrarian entries. I'm gonna explain that better as we go along. So this is the weekly grid. Up to the H1 time frame, we see the daily grid. And as you can see, it starts from the previous daily close. And here we move by increments of 0.25%. On H4, on the daily time frame, we have the monthly grid that appears at the opening of the month. It calculates the levels starting from the close of the previous month. And here we move by increments of 1%. So with one instrument, we have a multi-time frame analysis of the market that can be used for different needs. Because of course, if you're an intraday trader that can dedicate a lot of time to trading, that can stay in front of the screen most of the day, you're gonna try and trade also, you're gonna start trading with the daily grid. But if you're someone that does another job, that does another activity, and you don't have time to stay there all day, like those poor souls like myself, you're gonna perhaps start with the weekly grid. So you're gonna try to set up a weekly trade. If you have even less time, you can try and take monthly positions. Trend following or contrarian. Of course, we have codified certain entry patterns because one of the things that I anticipated is that these instruments gives us the possibility to work like professionals in a professional manner. It's better said, which means having a set of rules that justify the entry. Because the other mistake that most traders do is to enter the market because of a whim, because of an idea, because of personal sentiment. This is the worst thing that we can do as traders. We have to establish a set of rules, the famous operational checklist, and only take positions when the conditions that we preset actually present themselves. So with this in mind, we created these operational grids with these instruments in order to have this set of rules built in our Metatrader profiles. So I'm gonna present. Oh, okay, I see that you already wrote something in the chat. Okay, so what are the strategies to make proper trades using this indicator for sure? Is there any plans to add order blocks and live feed? Okay, sorry, can you explain again what those percentages are? Thanks. With that question, please don't trade. It's the gains or losses in percentage, daily, weekly, and monthly. Okay, well. Okay, let's go over the questions. So briefly, because I see that someone actually gave an answer here in the chat. The square dashboard gives you the percentage variation of the daily time frame, of the weekly, and of the monthly time frame. So this is Australian dollar, Canadian dollar. On a daily basis, it's gaining 0.90%. And as you can see, we're just below the 1% mark. On a weekly basis, it's gaining 1.92%. So if we go to the H4 time frame, we see that we are just below the 2% mark. And of course, we are up 2.92% on a monthly basis. So as you can see, we have a clear short-term trend, because having the net changes aligned and positive on a weekly, on a daily, weekly, and monthly basis, it means that in the short term, the trend is bullish. On euro, Australian dollar, the trend is clearly bearish. It's losing 2% on a monthly basis, 1.35 on a weekly basis, and it's down also on the day because of the inflation data. Okay, so we identify the trend, and once the trend is clear and the risk profile of the market is clear, we can move to the operational setups. I would like to employ this drawing software so I can make myself even clearer. So let's take an instrument that's actually trending to see what we can do in terms of setups with these instruments. And we're going to see what are the additional info that we use to confirm the trade. So this is the starting range for Australian dollar, Canadian dollar on a weekly basis. So we have two types of entries. We have the trend following entry and the contrarian entry. Okay, I'm mostly a contrarian trader. I'm also teaching myself to sometimes follow the trend. So we all know what a resistance and what a support is. We know that they usually change polarity. By change of polarity of a resistance or a support, we mean that the resistance becomes support and the support becomes resistance. So what happens on Australian dollar, Canadian dollar this week? Okay, last week it tried to go long, but then it came back down, but it didn't break support. From there, it started the trend. It resumed making higher lows. At the beginning of the week, the tendency is clear immediately. We move immediately above the previous close. And then what happens? The market breaks above resistance, pulls back, and transforms the resistance into support. So this is a clear-cut change of polarity. So on the pullback of the 0.50%, we open a long position in view of a continuation of the bullish move. Now we can also, okay, in terms of targets, there's a few things that we can do. Of course, we have the positive levels to use as references to place our take profit order. Okay, but how to select the best one? How can I know if Australian dollar, Canadian dollar is going to pay 1%, 1.5%, 2%? Of course, there are different ways. One way, a classical way to do this, is to look on the left side of the screen. When we have previous price structures, meaning swing points, swing highs, in this case, we can select the percentage level in Clonfluence with that previous price structure. Another way may be an even more professional way is to rely on average ranges. So for example, Australian dollar, Canadian dollar usually on a daily basis moves from high to low by 78, 80 pips, let's say. Okay, on a weekly basis, 160 pips. So I take the low. I entered here on the plus 0.5% mark. Okay, so the market already moved some. It made 60 pips, but it usually does 160. So I measure this move, 160 comes here, 1.5%. So if I open a long position here and I know this, the higher probability target is plus 1.5%, okay, because it's 160 pips from the weekly low. The same can be said for the daily trade. We also had a daily entry today. Of course, we didn't have the benefit of the change of polarity because the market moved on the news. So we would have actually had to employ a breakout order, a market order at the breakout of 0.25%. On a daily basis, I was saying that it makes Australian dollar, Canadian dollar on average makes 78 pips. So let's take the daily low. 78 comes up here on a 80 pips. So here 0.75%. So an entry here would have had its highest probability target here, and it would have been a 50 pips trade. Okay, these levels are so this is the trend following the directional setup that of course is valid both for the long and the short positions. And one thing that I didn't mention is that when the market here broke the resistance, we also had another info that could have helped us to increase our probabilities to see the market continue to move. Down here, we have an histogram that represents the values of the RSI. So the H4 RSI, but if we go below, we can see that also on H1 and 30, etc., was bullish. So when the breakout occurred and when the pullback was completed, the RSI analysis was bullish. This is it's a binary analysis. We don't look necessarily at the number, which is provided by the indicator. We look for above or below 50. So when the RSI is above 50, we have a bullish reading. When the RSI is below 50, we have a bearish reading. So if I have the long entry pattern, which is also supported by the RSI, of course, the probabilities that I'm going to see the market move are actually higher. So we have an entry pattern that's supported also by algorithmic analysis, and it all starts with the assessment of the trend. I see that there are a lot of questions. I'm gonna stop here and there to go back and read them all. Sorry, I'm alone. I don't have any help. Okay, so this is the trend following strategy. So we start from the trend, we look for the pattern, and we look for the confirmation of the algorithmic analysis. Okay, and we set the target based on the average range that we can easily find on various websites, or we look at previous price structure to define the higher probability exit point. One thing that I want to underline is that these levels are basically at the same distance from one another. Okay, so when we open a position with this instrument, with this operational grid, we also have a clear idea of what's the risk profile of the market. So let's say I take the long entry here. I can use the previous close as the first reference to place my stop loss order. The alternative, of course, would be the minus 0.50% mark, because if I'm expecting this and the market does this, of course, below the 0.50%, I don't want to stay. I don't want to be in this market. But the first reference, useful reference, is the previous close. So if I place my stop loss here, it's even better if I have a swing low around here to place my stop loss. I know that if the market goes here, I have a 1-to-1 risk reward, which is already realized. Here I have a 1 to 2, 1 to 3, etc. So I already know what's the risk profile of my operation, and I can also use the levels to manage my position along the way. So let's say I take a weekly long setup on Australian dollar, Canadian dollar. This is the entry, this is the stop loss, and the market starts to go my way. Then what happens? The market breaks above target 1 because, of course, the 1% and this is my first target. It's a 50 pips target. Okay. From there, after the condition of the breakout or the close above is verified, I can eliminate my risk, meaning I can move the stop loss to break even. Then, if the market moves above target 2, I can also choose to move the break-even order to a stop profit order. And I can continue like this, trying to maximize the return of my position and trying to assure a profit, because if the market comes back and closes my position, sends me out, of course, it's gonna be a shame, but I realized a 1-to-1 risk reward on my position. I don't actually use this technique, but for particularly volatile instruments such as cryptocurrencies, indices, it can be a good way to try and secure profits every time a position starts to move our way. Okay, so very simple. Very immediate. We start from the trend, we wait for the setup, we open the position, establish our risk profile and our orders, and so this would have of course we hope the market is going to do what we expect. So this week, all considered, we would have opened so far a 1-to-2 risk reward on Australian dollar, Canadian dollar, and of course we would have taken our profit right here. The magical thing about these levels is that if you go back in time on any instrument, not only on currency pairs, not only on the euro dollar, you realize that all the major and minor swing points of the market form on these levels or around these levels. Okay, so it's a clear advantage to see these levels and to know where these levels are as soon as the day opens, the week opens, the month opens, because these are not horizontal levels that other traders see, take into consideration, but they should, because as you can see, every decision of the market, every high, every low, every major swing happens on these levels or around these levels. This is Australian dollar, Canadian dollar. Let's take the euro dollar to see if it's not just a coincidence. Okay, this is the euro dollar. And look, right on the levels, exactly on the levels or around the levels, just a little bit above, a little bit below, exactly on the levels every day, every week, every month. And this is because institutional traders look at the market this way. They look at returns. They don't look at 20 pips, 30 pips. They don't look at horizontal price levels, trend lines, and the like. They monitor the market and they look in terms of percentage variations, and this is why these levels are so sensitive. Okay, so having them on the screen gives us a great advantage. Now, I want to move on to the contrarian pattern. So we complete our presentation of percent pivot. So these levels are, I describe them as resistances and supports, of course. So after the directional move exhausts itself, these levels can be used to open contrarian positions. So for example, Australian dollar, yen. Let's go Australian today because it's the big move of the day. Strangely, the New Zealand dollar today is losing 5.17% aggregately on its basket. So this is the weekly move. Long entry, 2.5% in line with the average weekly move. So Australian dollar, yen already completed its average weekly range, and we have 2.5% as a resistance. This can be used as a level to open a short position. And of course, the contrarian entry can be supported by the change of the algorithmic analysis on the lower time frames. We all know that the RSI is a little bit lagging with respect relative to the price action. So we should, if we want to add the algorithmic analysis to the contrarian checklist, entry checklist, we should look really low. We should look for a change in the algorithmic analysis on a 1 minute, 5 minutes time frame to see if we go from bullish to bearish. So for example, here I should go back to yesterday. I can see it clear. Now there's a problem of visualization, but this is a way to support the contrarian entry. But the same as we can select the target based on the previous price structure, we can also select the best level to open the contrarian position based on a previous price structure. So if Australian dollar yen does more than 1% on a day, and I also have a previous resistance on the left side of the screen, I can open a short position here. So I can use this method, or I can consider average ranges, because Australian dollar yen does on a daily basis 120 pips on average. So let's see what it did today. This is the low, this is the high, and they were 132, which means that the average range was completed at plus 1%. So this was an interesting level where to place our short entry. And of course, with or without the support of the algorithmic analysis. So this would have been the entry level. The stop loss would have been placed above the 1.25% mark, and the target, of course, could have been set in terms of risk reward. I'm looking for a 1-to-1, a 1-to-2. In terms of a Fibonacci retracement. Usually with this system, I look for, on a daily basis, 1 or 2 percentage steps. Okay, so I would have placed my my take profit level on the 0.50% mark. So this would have been the trade. I actually opened the short on Australian dollar, Canadian dollar, because I was expecting a little bit of bullishness on the Canadian dollar after the Bank of Canada, and the jury is still out. We're going to see if we go to target. So this would have been the setup, and a way that you can improve your chances that the contrarian operation will actually go your way is to look at the price action, if you're trading a currency pair, of the entire basket, not only of Australian dollar yen. So, okay, Australian dollar yen reaches resistance and you start to see bearish price action. But the fact that you start seeing bearish price action on Australian dollar yen doesn't mean that the Australian dollar is going to correct as a whole on the entire basket. What we want to see is a correction that starts on every currency pair of the basket, because usually corrections, rebounds are synchronized on all the main forex pairs of the basket. So if the Australian dollar is going to pull back, it's going to do it against every counterpart. So if we start seeing the move, the contrarian move initiating on every currency pair, and we can see it on a daily basis in percentage terms. So if we start seeing the Australian dollar giving back some of the gains on all currency pairs, it means that probably we're gonna manage to reach our take profit on our contrarian operation. Okay, so this was a typical contrarian intraday setup. So of course, we can also use weekly levels and monthly levels. And another very useful way to determine the level to open the contrarian position is to look for the confluence of multi-time frames levels. Okay, so if I have a on the same price level, a weekly, a daily, a weekly, and a monthly resistance, chances are the resistance is going to be stronger. Chances are my short position in this case is going to go to target. Okay. The last instrument we have here is a time frame changer, which I haven't used so far. I don't know why. Of course, this is not its real value because we have it right here. But as you can see, through the use of color, it's representing the price action of all 9 time frames. We have different colors for different price action conditions. Let me pull up the input section so I can show you what's actually telling you. The instrument is time frame indicator. If you go to the input sections, you see the price action conditions associated with the different colors. So we have lime green, which is this one that tells you that we are above the previous high. So on this currency pair, we are above the previous highs on a weekly basis, on a daily basis, on a 4-hourly basis. Orange red, it means we are below the previous low. Pale green and peach puff give you bullish and bearish candlesticks. And then we have red and green, which identify break-in patterns. Okay, so the color red means that we broke the previous highs and we went back below. The green color tells you we broke the previous low and we came back above. Of course, the break-in conditions are particularly useful to set up contrarian entries. So if we see the break-in pattern like this one, for example, the market breaks above the previous high and then comes back below, and this happens on or around a resistance, of course, we have higher probabilities to see the correction actually start. Okay, so with a single instrument, we can stay on a single time frame, and we know where the price is on every time frame. Okay. Let me see if there are any new questions. Okay, Maurizio says there's a lot of information and he appreciates that. Okay, so of course, Ismed says that we just need to learn how to put them together. And this is why we're going to have operational webinars. The first one is going to be on February 8th at this time, at the same time of this presentation. And I'm going to walk you through the system with the market open, and we're going to look for operational setups. We're going to look at what happened during the day, what's happening during the week. I'm going to try and go in greater details to do various examples that are going to help you, of course, recognize the entry patterns and the logics that we employ to set up our trades. I personally use this model. I also use the algorithmic analysis in support. Okay, Ricardo published something. I don't know what it is. Yes, I'm very Italian at this time of the day. I'm even more so. Uh, thank you. I can sound more American than this, but sometimes, you have to be really in the mood to mask the fact that you are Italian. Today, perhaps it's not one of my best English days. That's for sure. Okay, with that said, let's move on. I'm going to briefly show you what else we have. Here we have a different analytical model that gives us, as usual, horizontal levels and dynamic references, moving averages. Ricardo, I'm going to come to that. He's asking how much does it cost? It doesn't cost you anything. Let me get to that. First of all, I repeat, I'm going to briefly show you what else we got. They're very simple. I mean, the best operational model is actually the first one, the percent pivot, but we also have here the bid-ask indicator that gives us a certain number, a preset number of previous highs and lows of the time frame that we select. So through the input section of the indicator settings, we can decide what type of highs and lows we want the instrument to show, to trace on the chart, and of how many periods. So these dots that we see with the visualization function up to the hourly time frames are the previous highs and lows of the previous 5 trading days. Above on H4, we see the weekly highs and lows of the previous 5 sessions, and on the daily, we see the monthly highs and lows of the previous 5 sessions of the previous 5 months. And then we have the MA in color, which is a particular moving average. It's a single indicator that gives you a different cyclical average on every time frame. Starting from the monthly, we see the annual moving average. On the weekly, we have the semi-annual, the quarterly on the daily. Then we have the monthly here on H4, the weekly, the daily on M30, and then we have the intraday moving averages. On M15, we have the 4-hour moving average. On M5, the hourly moving average. And on M1, the M30, the 30 minutes moving average. Now, these averages are more interesting than the 20 periods, the 50 periods, the 21 periods, which are useful as much only because many traders actually look at them, but they do not represent a specific period of time. These moving averages represent the day, the week, the month, etc. And if you observe the market, you realize that usually, on average, at least once inside the period, the market goes back to the average. So on a weekly basis, on H1, we have the weekly moving average. Once a week, the market goes back to the average. Okay, and if it's more than a week, then the market doesn't go back to its weekly average. It means that the probabilities that a move towards the average is going to come soon are actually higher. Okay. Of course, there's an attack on the Bank of Japan. The market doesn't touch the weekly moving average for months on end. Of course, this has to be taken into consideration. If there are particular specific market conditions, macroeconomic situation, geopolitical environment, and a market is just going up or just going down, the cyclical moving average it's not the best reference point to set up the trade. It could be several weeks before Australian dollar yen goes back to the weekly moving average. But usually once a day, once every 4 hours, once every hour, once a week, once a month, once every 3 months, the market goes back to the average. So if we had an extended move, we are on resistance or support, and it's more than a week, than a month that the market doesn't go back to its average, we can use it. We can set up the contrarian trade using either these levels or the percentage levels, and use as a target the cyclical moving average. And I tell you, these are really powerful reference points, because these are specific moving averages. Moving averages are not held in high esteem by traders in general, professional traders. But these moving averages as targets for contrarian operations, let me tell you, they are really, really useful. Okay. Also here we have the algorithmic analysis. Here we put in the MACD. You can also personalize the algorithmic analysis, because the indicator allows you to choose from different oscillators. It's algo MTF, and you have MACD, vortex, ATR, momentum, RSI, and stochastic. And you can also set the variables for every indicator. You can customize those. Okay. Let me tell you that the confluence of the RSI and the vortex analysis for trend following trades is actually very, very reliable. Lastly, here we have an indicator that shows us the candlesticks, the current and the previous candlesticks of the selected time frame directly on our price action. So, for example, here on the daily time frame, we see the monthly candlesticks. Many times we trade the 4-hour time frame, the 15 minutes time frames, without knowing how the weekly candlestick, how the monthly candlestick looks like. Okay, so this indicator, the price assistant, allows us to see the current candlestick of a higher time frame forming, and all the reference points of the previous ones. So the lows, the closes, the opens, and the highs. And this can be useful references to set up our trades. So this is actually created for trend following operations. So for example, here on Bitcoin makes a big down monthly candlestick, then a smaller one. The short trend is actually slowing down. And then what happens? It breaks above this highs. So on the breakout, we can try to follow the trend of the higher time frame candlestick. And this would have meant a really big monthly trade on Bitcoin, for example. Okay, we open our long position here. Of course, we place our stop loss before the below the lows, and we can use, for example, this previous monthly high as a target, or an even older one. For example, we could have set as a target price this previous monthly high. Okay, so this is particularly interesting to follow the trend of the higher time frame candlestick. Okay, makes very clear what the market is doing on higher time frames, and that's the main tendency of the market, and we should always try to follow that until we reach resistance or support, and then we're going to try a contrarian entry, but that's a different approach. Okay. Yes, Maurizio, Ismet says that it's very good to see what the weekly and the daily are doing. Of course, we always have to know what the market is doing as a whole and what the specific market is doing on the higher time frames, because if we have clear what's the trend, I mean, we can minimize the errors, we can minimize the times when we are on the wrong side of the market. Okay, so I'm gonna try to make this clearer and clearer with our next webinars. Let me remind you, I mentioned it a couple of minutes ago. The first one is going to be on February 8th, and we're gonna do some live trading together. I'm gonna go over the setups once again. We're going to see the trend following, the contrarian setups with the percentage levels. We're going to see something more about the moving averages, etc. We're going to analyze the market and try to take positions, place stop loss and take profit. So you can see how someone that uses these instruments, has been using these instruments for years, actually uses it to trade. With that said, I would like to go back to the slides to tell you how you can get one-click effects. These are some compliments that we make to ourselves. So I'm gonna save that for another time. Okay, so in order to have one-click effects for free, because it's always going to be for free, one should have to activate a live account, or if you're already a Vantage client, refound your current account. You can request one-click effects to your account manager if you already have one. If you don't have one, I'm gonna give you a mail address where you can request one-click effects. And also, you can have a 15 days trial without the deposit. One-click effects is going to work only on a live account. So a live account has to be opened, okay? But you can have the software for 15 days before making the deposit. That is going to allow you to have one-click effects indefinitely for free on your trading account. If you don't already have a Vantage, so this is for current clients of Vantage Markets and also for new clients. If you already have an account, you can send an email to clientsuccess@vantagemarkets.com. I'm gonna post this address here in the chat so you can copy it. Okay, and this goes for everyone. If you already have an account manager that you know that you speak frequently to, well, you can call him, mail him, email him. If you don't have one, of course, this is the address. Let me copy it and paste it here, everyone. Okay, I'm gonna give you some time to copy it. And in closing, so 15 days, let's say quote unquote free trial, because it's always for free, and then with a deposit of 500 euro, you can maintain the software indefinitely. We're gonna make live trading sessions, and and we're gonna post once a week a weekly report with the analysis conducted through our instruments on the most important financial instruments. So I look forward to seeing you on February 8th. We're gonna start trading together with one-click effects. I'd advise you to get it before that date, so you can start having a look at it and start understanding a little bit better what it tells you, what it does. So you're going to have many questions after you'll have had a couple of days or a couple of weeks to play with it. And on the license profile, you're also gonna find the tutorials. You'll find a tutorial, a link to the video tutorial to install the software. There's gonna be a tutorial that explains how to use the different profiles. Okay, so you're gonna refer to these until our next meeting, our next webinar, and then I'm gonna gladly respond to all your questions, and I'm going to go further into the explanation of the instruments and of the setups. Okay, Let's see, there are two questions on Q&A. Hello, the FX is only available when using a computer. I only been trading on phone, but I haven't seen the FX function. Okay. So the software can only be used on a PC. It's not available on a mobile phone. And this is a good opportunity because it's really a bad habit that of trading through the cell phone. It's better to have a different type of setting. I don't use the phone much. I never used it to trade, sometimes to see the quotes, but it could be an interesting opportunity to move to the desktop for you, Sylvia. And Anita is asking if you guys are going to be invited. Of course, all the participants of the webinar are going to be contacted by Vantage Markets. So if you just can't wait to put your hands on One-Click FX, which I would understand, you can send the mail. That's a reference, but you're going to be contacted by the broker. They're going to ask you if you like the presentation, if you like the instruments, and they're going to ask you if you like to try the software out. Okay, so you're going to be contacted. Okay, I see that there are many positive comments. As Sylvia says that that if we had made this this presentation a couple of months ago, probably she wouldn't have made a couple of bad trades, as I understand. And of course, this is a big help in order to do always and just the same thing, the same pattern. If something happens, I go long. If something else happens, I go short. Even trading differently, it's the way to have a short career. If we want to have a long-term career in trading, if we want trading to be sustainable, to pay us some money on a regular basis, we need to start trading a system. If we have a system and we always do what the system says, we're not going to win every trade, but we're going to remain alive. And in time, with these instruments, in a short time, we're going to start to be profitable. And I hope I can help with that through these instruments with our webinars. So thank you guys for showing up, for accepting this invitation. I'm glad that there's so many of you and that you have you already given me a positive feedback. So hope to see you all on February 8th. And in the meantime, start playing with One-Click FX, and we're going to talk about it next time. Okay. Sylvia is going to be with us, probably even Ricardo and all of you guys. Thank you all, guys. Have a great evening and see you soon. Bye.